corporates are also.
They are also quite blingy and all. But let's keep it going then, with earnings season around the corner. We have a whole host of management coming in for you all. And first up, let's pull up the charts for Union Bank coming in. That was the company which reported its numbers. When you look at the numbers coming in for the company, NII and profits have seen a jump on a year-on-year basis. Let's bring on board the MD and CEO of Union Bank, Mani Mekalia. And very good afternoon actually very good morning, and let us just dive right in. Let's talk about firstly, talk to us about your corporate performance coming in over there. How is the book performing in terms of that, and where are you seeing the demand coming in from? Are they availing any working capital?
Working capital limits, see, if you look at our loan portfolio right now, term loans are the ones we're getting many. Working capital may be about in the ratio of 80-20, that is what we are looking at. And you may have seen there has been a lot of growth in the corporate structure. We are seeing growth not to a great extent, but of course working capital limits are also being availed. There is a lot of traction in the availment of BGs and LCs by the corporates.
Good morning, ma'am. This is Cheryl also joining in the conversation. If you look at your NIMs in the quarter gone by, it stood at around 3.15%, and which is actually strong. But do you believe that there will be pressure on the margins in the high interest rate regime that we've actually entered into?
Yeah, we feel that the NIM at 3.15 what we showed, it was due to largely because of interest on advances. We did not get much on other incomes like treasury income. We were not able to get so much of treasury income, but interest on advances is what our focus was, and core income was what we got. So I am sure that we will be able to sustain that NIM level of 3%.
I just want to understand in terms of the bank had guided keeping the gross non-performing assets under 9%, and now that being achieved, what is your outlook on the asset quality?
The guidance was to come below 9% with regard to GNPA, and NNPA was regard to coming down below 3%, which we have been able to reduce in the H1 itself. We were able to achieve these numbers. As on date, when you look at this, my NPA recovery is to the extent of 8,900. My guidance was to recover about 15,000 crores for the whole year. I'm sure we will be able to reach that numbers.
Right. Let's talk about recoveries, and what sort of target have you set for yourself for recoveries, and also if you could shed some light if that will be largely via NARCL?
See, we have received LOIs for 3 accounts, and we have set aside something like 5,000 to 6,000 crores that has to be resolved through the NARCL. And there is a lot of traction in the NARCL accounts, and going forward, we should be able to recover that kind of amount.
Ma'am, you did touch upon, QIP, but are you looking for a QIP in this current fiscal year?
Yeah, QIP, we would be looking at the present, looking at the market scenario right now. We were a little apprehensive, but now going forward, if not in the third quarter of the year, we will be able to raise in the fourth quarter of FY23.
All right, we leave it there. Thank you so much for joining us on the show and talking about the quarter gone by for Union Bank and where you see it headed from here on. And that was the MD and CEO of Union Bank. But let's shift focus to Metro Brands then. And Metro Brands also came up with a strong set of Q2 numbers. We are joined by the management right now. We have Mr. Nissan Joseph, who's the CEO at Metro Brands, joining us this morning. A very good morning to you, Mr. Joseph. Thank you so much for joining us on ET Now. This is Cheryl on the other side. And let me just dive into a very critical question, and it's about the price hikes that you have already taken. Is there any impact on demand due to the price hike that you all have taken? And also, has there been any sort of down trading and a shift from premium products to mass products? And also, if you could shed some light on that, because, usually when you take price changes, it does affect consumer sentiment, doesn't it?
Good morning. Well, I think there's a lot of questions there to answer. We've seen our biggest growth in the last quarter come from shoes that were over 3,000 rupees. When we saw actually a little bit of the share of business of shoes under 3,000 go down a little bit. So we're not seeing an erosion in terms of people trading downwards. We're actually seeing our ASPs in the higher range growing. And that's, I think, a reflection of the premiumization of India and the target market that we cater to. That's number one. Number two, don't forget we also had 2 festivals in there of Dussehra and Janmashtami that also tends to make people want to buy premium products. So we're not seeing that erosion happening in terms of customers trading down in purchase value. On the contrary, we're seeing our best growth come in the highest segment of our business. So that's number one. I think overall, I don't see an erosion in demand. What we are seeing though is we have lapped COVID now, right? So COVID last year probably got loose around September, October, and there was a little bit of pent-up demand that happened probably in the first 3-4 months of the quarter, first 3-4 months of COVID coming open. So what we are seeing is, we're going to start lapping those numbers, and we're going to come up with more rational numbers and numbers that we can all make sense out of, as opposed to comparing it to 2 years ago and things like that. So compared to Q on Q, we're seeing the best growth compared to last year, at the higher levels.
Right, Mr. Joseph. This is Vinny joining in as well in the conversation. And, just want to keep it going then, in terms of inflation that we're talking about, what is the price hike, any percent that you could share with us that the company has taken in Q2? And are there any more price hikes planned in Q3 as well?
Yeah, so we've averaged between 5 and 7%, Vinny, in price hikes. However, we're seeing input costs stabilize. So that's been a big plus for us, that we don't think we're going to see any more anticipated spikes in raw material price increases. So we are seeing some stabilization of that going on. Having said that, though, the macroeconomic turmoil that's been happening has not necessarily gone away. So it doesn't mean we're immune or have got past all the potential price hikes. But for now, it doesn't seem to be as erratic as it was about 4 months ago.
Right. Let's talk about your EBITDA margins then, Mr. Joseph. And they've expanded actually on a year-on-year basis in the quarter gone by. But if you look at it on a sequential basis, there's been a contraction. One, could you tell me why such a contraction on a quarter-on-quarter basis? And will you be able to get back to that 36% EBITDA margins levels that we had actually witnessed in Q1?
Yeah, so I think, it's like comparing sales at a restaurant on a Monday night versus a Sunday night, right? In the retail business, we do have some seasonality that comes in with it, caused by not only the seasons itself, but also by the fact that in Q2, we typically run our end of season sales, right? So that is a big factor that happens in Q2, and it also happens in Q4 in India specifically. So those are the 2 quarters. If you look at the breakdown of quarters, Q1 and Q4 run about 25%. Q2 is our lowest quarter, running about 23% of the year, and Q3 becomes our biggest quarter, running about 28%. So, it is one of the lower quarters that we face. Having said that, though, I think our EBITDA growth over last year was 52%. So we are seeing some very good strides there. Our sales growth was 47% over last year. So we're seeing some very good numbers coming through. And as far as going back to the 36, we in Metro have always done in the 30 range. And we guide to that, and we're pretty comfortable that on an ongoing basis, we will be in the 30% plus range. It will blip up, it will blip down, but I think we're very comfortable with the 30% range when it comes to the EBITDA number.
Okay. Mr. Joseph, I want to talk about the share purchase agreement that you've signed for the 100% acquisition of Cravatex brand. Now, what is the growth opportunity? Could you just shed some light on that you see coming in over here? What should we be expecting in terms of growth here?
Sure. So I think the athletic space in India has been booming, right? So we all know that both athletic sports and athleisure have been growing at quite a rapid pace. In fact, probably the fastest growing segment in the footwear business. So that's number one. Number two, we think it's important strategically in our portfolio of brands to have a global sports brand. So Fila fit that very, very well. It is a strategic acquisition that comes with Fila, and the Fila license allows us to sell Fila across the country in all channels, and also license products of Fila that we can create and make in India, specific for India. So that opportunity is pretty immense. It's a strategic decision that we've taken to invest, the capital allocation. The good news on the capital allocation is not coming out of debt. We're funding our own capital allocation on this project. We also don't think it's a magic pill that we're going to swallow and all of a sudden become Superman here, right? We know that we have to build that into our ecosystem. And, everything Metro does is done with deep operational rigor and financial discipline. So we're going to build that brand. We're going to start playing in that space. But if you look at our portfolio of brands, the sports section, the sports category has been a white space for us. We've not played in it. That's number one. Number two, it also gives us exposure to Proline, which is a very well-known brand in India, that we believe in the athleisure apparel space can have a significant legs. But that is also a business that is not in our current portfolio of brands and in our quiver of arrows. So it's things that we have to start dissecting. We first need to focus on integrating the two companies. And then as we do that, we will be putting together a roadmap on how we plan to unlock the potential of both Fila and the potential of Proline in India.
Actually, aptly said. Also, we've seen a lot of emphasis come in on sportswear and athleisure wear, given the fact that everyone was at home during COVID period, so they tried to explore that area as well. But talking more about this acquisition, Mr. Joseph, analysts have said that this particular acquisition is value accretive. So what sort of an additional revenue potential can this acquisition actually lead Metro Brands to?
Yeah, so I think sports is a huge category. It's a significant percent of the footwear space. And it's a space that we've only dabbled in our Metro stores. We do carry Skechers and Adidas and Puma in our Metro and Mochi stores, but we just dabbled in it. We've not made a concentrated effort into it. This allows us the ability to take that brand and build mono-branded stores across the country and take it to its level where the brand gets recognized as a critical brand for us. So we definitely think it's value accretive. Probably not in the very, very long run, but definitely not next quarter. It's not going to be. We'll focus on integrating the companies and understanding how we plan to fit that brand into our portfolio and layer it against the strengths that we have and leverage what we do.
Okay, Mr. Joseph, thank you so much for joining in with us this morning on ET Now. It's always a pleasure having you on the show.
Thank you.
That was the management of Metro Brands for you all. As of now, the stock is a bit subdued in trade, down 2%. But surely keeping an eye out on this one, Sheryl. Okay, on that note, we'll slip into a very short break. Viewers, don't go anywhere. We'll come back with your stock-related queries after the short break.
आग को फैलने से रोकना मुश्किल
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you'll be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You should remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%, but we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
The rupee depreciation is only helping further than the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is that नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
And although it's difficult to predict, return will be more than 10 times.
Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply. The Nifty Bank Index is down. Momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's the daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets.
I'm the youngest in my family, so cover milta hai. You get money, and I collect a lot of money, so I am very happy with collecting money all throughout Diwali, and I'm always up for Diwali. A happy Diwali to all our viewers. Hope you all have a dhamakedar, patakedar, tadafari Diwali, and hope your portfolio does as well as the crackers that are bursting in the sky. So hope you have a great New Year as well.
Welcome back. You're watching Buy Now Sell Now on ET Now. And before we kickstart our query segment, let me bring on board our experts for today. We have Kunal Bothra as well as Vijay Chopra joining us on the show. Very good morning to you, Kunal, as well as Vijay. Happy Diwali to both of you all and your family in advance. Let me come to you first, Vijay. And let's talk about what's happening in the markets. Today we are seeing somber moves coming in for the benchmark indices. But yes, this Samvat has been pretty flat when you look at the way how the markets have moved. Over the last few months, the volatility has only increased. And in such volatile conditions, how can retail investors protect their wealth?
Cheryl, very happy Diwali to all the viewers and to you and your team. You've been bred on the tenterhooks, actually reporting, whatever market has, the kind of volatility market has shown. So it's a great job done. So congratulations to you and your team as well. Yes, very pertinent question in these times when people really don't understand what is what, because we saw that 2020 saw a huge influx of retail investors, and whatever they bought, that went up. And 2021, October onwards, whatever they bought came down. So, it has been a topsy-turvy kind of a situation where good stocks lost a lot of ground. Even the likes of TCS and Infosys lost about 30-40% of the value. So definitely very tough times, 2021 October onwards, till this October. But again, I think that market always rewards the investors who are patient, and they stick to the right stories. The mantra and the advice to the retail investors is that don't get caught up in frenzy. We saw a lot of internet companies coming up with IPOs with huge valuations, and I would say that absurd and berserk valuations. So I don't support that. I think that you guys have been interviewing me also, and I've been telling my views that I am a great fan of valuation. I'm a great fan of good value on the table. So don't go for valuation. Go for value, number one. Number two, look for companies which have a good cash flow. Number three, the business model should be futuristic. It should not be like one that people got caught up in stocks like Dish TV, which was a dying model. So look for business models and companies which are investing in the future, which have products of the future, and yes, stick to consumption theories. So any company which has a good consumption base, look at Hindustan Lever, look at ITC, look at Marico, Dabur, the chances of going wrong are very, very less. So if you have bought a Britannia even at higher levels, you have bought a Nestle even at higher levels, don't worry, have patience. You are definitely going to, make your money there. Plus, if you have bought a stock like ITC even at higher levels, the returns which ITC gives as a dividend is more than that of FD. So your money is not going anywhere. So rest assured that if you buy good companies, there is money to be made. And finally, I would like to make a statement which I've been making all the time, that good stocks are like tennis balls and bad stocks are like eggs. So look for good stocks, good opportunities, good companies, good cash flows, good balance sheet.
Absolutely. So there are some pertinent points made by Vijay on how can you protect your wealth. But let's kickstart quickly with the query segment then, and let me just straight dive into it. This first question I'm getting is from Maleshwar, and he wants to know whether he can buy EID Parry at the current price for the short term. Kunal?
Well, I would suggest yes, you can look to buy EID Parry. I think it's a good stock. There are only two names I think which have done reasonably well in this last 4 months, 5 months of the differentiated trend, I would say, for the sugar pack. One of them is the ethanol, a stock from that category, Praj Industries, and the other is EID Parry. So both these stocks have done reasonably well. I would suggest to hold EID Parry, and if possible, if you're looking to put additional amount of money, then I would probably suggest even Praj Industries at current zone.
Okay, Vijay, the next query we have is coming in from Akshay from Dubai. He's holding 100 shares of Vinati Organics at 1,910 rupees. With a long-term horizon, should they continue to hold this or switch to another chemical name?
Well, it's good. It's a good company, and if they've gotten around 1,900, I don't think there's any fear. Keep a strict stop loss of 1875, although, but I think that there is money to be made here. And chemical story, again, as I said earlier, that it's good cash flow, futuristic business. Most of the chemical companies were getting APIs from China, and the prices of APIs got through the roof. But prices are now coming down. Logistics problems are now, I think, that more or less being solved. So I think that Vinity Organics is a long-term haul. Stay patient and just stay invested in this stock. I think that can do 2400 again.
Just a quick note for our experts today. We have a lot of queries and we have a very short, limited time to take the queries today because it's earnings season. So I would request both of you all to keep your answers a tad bit short today. This one is coming from Surana and he's thanked you, Kunal. He said, thank you so much for your advice which you gave to hold on to Axis Bank. But today he wants to know about Apollo Tyres. Should he look to buy at current levels?
In fact, Axis Bank was also one of my Diwali picks on BNSN, and the stock has done reasonably well. On Apollo Tyres, I would be bullish on the stock, and my sense is that the stock should do reasonably well from a short-term basis as well. If you are looking at a time horizon of 3 months to 6 months, I would probably expect 300 to 305 as a potential target for the stock.
Vijay, this next query we have is on Hinduja Global Solutions. The viewer wants to know how is this stock looking like and can one look to enter this one for long term?
Well, yes, I think that we have seen a decent correction in the stock. And even in the recent times, it has seen a high of 1700, presently at 1231. So it can be entered into. And but again, keep a stop loss of 1100 and stay invested. I think that the stock has the potential of going to 1700 again.
Wants to know if delivery is a good buy at these levels, Kunal, as a swing trade that's 3 to 6 months holding, and if not, what levels do you suggest to acquire and do you even recommend buying it at all? We've seen delivery being hammered out of shape in the last 2 trading sessions, over 20% fall already in this one.
So very difficult to say from a long-term play because the history is of course very limited, but then on the daily charts as well as on the hourly time frame charts, the indicators are into a deep oversold territory for delivery. So there could be a higher probability that the stock may get into a bounce. Ideally, what you should be doing is wait out for a point till mid-session where the stock falls into much oversold territories. For example, if it breaks below the 390 mark and 380 mark, say in the next subsequent sessions, those could be classical entry points for buying the stock from a purely contra play and from a very short-term kind of a play.
Vijay, this next query we have is coming in from Jayakishan from Gwalior, and they bought 17 shares of L&T Technology at 3,600. Should they continue to hold this? What should they be doing?
Well, it's one of my favorite stocks, and you're talking about LTTS, right? L&T Technology Services. I think that this stock is again a long haul stock and one of the most fastest growing companies in the IT space, and has a wonderful R&D setup across the world. So I would recommend that just keep on holding and adding this stock whenever you get in a fall, maybe around say maybe 3,400, 3,300. Keep on adding this stock. This stock has the potential of going to 5,000. So I am fairly bullish on this stock. Hold and buy more on declines.
Right. This one's coming from Santi, and Santi is asking about Clean Sciences holding about 15 shares at a price of 1,609. The company has declared a good Q4 results even on input cost pressures. Please give your inputs whether to accumulate and if any headwinds in the future. Do you track this one by any chance, Vijay? A Clean Science, what should Santi do with the holding already that he has?
I think that this can be held on to, and again requires patience. A good business model, a good company, and if at all it consolidates around say 1,600, it can go to 2,000. So definitely a hold.
The next query, we have a couple of queries actually on this stock, and that is HDFC AMC, Kunal. There's a viewer who's bought it at an IPO price, and other viewer is holding it at 1,477 rupees. Should they continue to hold this, or is it a good time to exit and switch somewhere else?
No, I think I would probably suggest to hold on. I think yesterday also there was a query regarding this, and I was mentioning clearly that the stock would probably hit back about the 2,000 levels and even possibly cross about the 200 DMA. The crossover has happened today for HDFC AMC, and this looks very attractive as a setup. I would suggest a hold.
All right. This next query that I have is coming in from Manish Raju. He's holding 50 shares of IRCTC at the price of around 719 rupees per share. He's asking you, Kunal, do you see any scope of upside in the short term, and can you start adding more from current market price levels?
In fact, I would suggest to add on to IRCTC or even hold on. My sense is that the stock is looking extremely attractive on the charts and is just heading back towards a breakout. I think a few weeks back, I had actually given a buy on IRCTC from a positional play, expecting 775 broadly as a target range for the stock price. So I would be bullish on the stock even from current levels.
Right. Time for a quick break on this edition of Buy Now, Sell Now. But before we hit and take that break, I would like to wish Santi, Sagar, Soumitra, Dikshita, also Maleshwar, Sunny, all of y'all who are wishing us a happy Diwali, a very happy Diwali back at you, and all the viewers who are tuned in. We'll now slip into a break.
Mushkets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
Market right here in ET Now.
Start trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Overvaluation case.
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free.
When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money. If the normalization in the world will happen, demand, which in a sense got destroyed, will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
For long-haul FII, who looks at India as still a promised land for consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.
Hello and welcome. You're watching Markets at Noon. Midway through the trading day, we help you catch all the trading action
and get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
Master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch Markets at Noon every trading day only on ET Now.
Rakesh Jhunwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of years ago.
I always used to, I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी नहीं.
Once a trader, always a trader. Rakesh Jhunwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember you know, I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
In individual sectors.
What's the sense that you're getting on volume growth? Just clarify this entire case. What is it going to mean for the business? What else are you looking at?
It was clearly one of the biggest deals.
ET now have been getting you bit by bit. Welcome back, and you're watching Buy Now Sell Now on ET Now. Let's quickly keep it going then with all the queries that you all are sending us for your stocks. And you know, actually this one is coming in for Kunal, but I'm going to take the liberty to answer this because I'm sure Kunal will agree. Someone is asking for Kunal's zero to hero picks coming in, but Kunal has been giving those Pataka picks all throughout the week. So please watch all the shows backward as well. Even today he's given it. So keep an eye out on all those stocks. But let's move on. And Kunal, this query is coming in on Jamna Auto or Canfin Home. Canara Bank actually. Which one should Sudha be picking from these two if they are to pick up any stock?
Thank you, Vinny, for that. So on either of these two names, I would probably prefer Canara Bank, not just because the PSU banking theme of late has been gaining a lot of momentum, but the way the stock has given a breakout of long-term charts, I would believe that there could be a significant upside even from current levels, and this could be a start of a possible multi-year uptrend. So I would prefer Canara Bank.
Right, this was coming from Soumitra, and he wants a view on and he wants a view on Relaxo. He's saying while Campus and Metro are performing well, Relaxo seems to be pretty stagnated. He wants to know about fundamentally how is the counter looking like, Vijay, and are there any red flags that he should be aware of when it comes to Relaxo, because I believe he's already invested in Relaxo footwear.
Well, the red flag is that the stock price to earning is pretty high. This means that the earnings are not catching up. So on a book value of 70 rupees, the stock is at almost 1,976 to be precise. So I think that earnings have to catch up. The company has to show earnings, and until and unless we see an upside in the actual performance of the company, I don't think that the stock would perform. So better to stay away or exit and get into some other good fundamentally strong story.
This next query we have is coming in on City Union Bank. We have Raghu from Bangalore who is holding 1,000 shares, 1,093 shares at an average cost of 179. What should they be doing with this one?
See, I think you can continue to hold on. But my only sense is that from a short-term wise, there could be a possibility that City Union Bank may correct and come back towards, say, 182, 183 levels. So if you are actually okay with another 3%, 4% correction from current levels, then I think you should stay put. Short-term wise, I would look at 200 as a potential target for City Union Bank.
Okay, Jay Krishnan is writing to us from Kerala, wants to know about Tata Elxsi at a price of around 7,852. What should Jay Krishnan do with the holding? Hold, sell or average? And if average, at what levels? And this for medium term, Kunal.
So I would suggest to exit the stock on rallies. I think the structure of the stock has changed dramatically from being a stock which was clearly a favorite from the IT, mid-cap IT space, to now being a stock which has started to underperform, in a very steep kind of a margin. The stock has broken below its 200 EMA for the first time in last 2 years. That itself indicates that possibly the major trend for Tata Elxsi could be reversing. I would suggest to exit the stock on every rally.
The next query we have is coming in from Aarti Vijay. She wants to know which 2 stocks could she pick from Brigade, GHCL, Jamna Auto for a long term.
You said Brigade, GHCL and Jamna Auto.
Yeah, any 2.
So I think that GHCL is one company I've been tracking and, is reasonably good. The numbers have been fine. So if you want to pick up GHCL, anywhere between 600 to 620 is a good price to enter. Secondly, Brigade. I think that Brigade is a very good developer based out of Bangalore, and we've seen already a good correction from almost 585 to 480 levels, 100 rupees gone. But again, the levels are very good to enter. So Brigade is another pick. So, I think that Brigade is better, and followed by GHCL.
Right. Let's take this one from Madhuri. Oh, actually, sorry. My producer just told me that let's kickstart with the rapid fire then. And let me take this first query to you, Kunal. Madhuri wants to know about Borosil Renewables holding at 590 rupees per share. What can average at what levels?
So I think you can continue to hold on at current levels and possibly average just around that 500 mark.
Okay. Ganesh from Chennai wants to know, can they buy Pradeep Phosphate at current levels, Vijay?
Yes, I think that it's a good company. They can definitely get to.
All right, this one is from Sameer from West Bengal. Wants to know whether you should accumulate Tata Consumer or Trent at current levels for decent returns in medium term. Kunal.
So I think both these stocks are attractive. Tata Consumers is a low beta. Trent is a slightly high beta stock. You can look at both of them. Trent would be my favorite.
Okay. The next query, Vijay, this one is coming in from Mani Kadan from Kerala, and this one is on KNR Construction. Should they buy this at the current market price?
Well, I think that if you want to be in the construction space, better to be with L&T. KNR Construction, avoid.
Okay, Hitanshu has bought Go Colors, Go Fashions at the price of around 690 rupees per share. Hold or sell? What should he do, Vijay?
Well, I think that sell on rallies is the call with Go Fashions.
Kunal, Raghu from Pondicherry wants to know on Dhanuka Agritech. They are holding around 800 shares at 710 is an average price. Should they continue to hold this or sell? What is it looking like?
I would suggest to sell.
Okay, Indu, happy Diwali to you as well. In the short term, West Coast Paper, please. I think that was your Diwali pick, Kunal. So hold, isn't it?
Yes, absolutely. Hold is my recommendation.
Okay. This next query is on UPL coming in from Anup, holding 4,200 shares at 740. Vijay, should they add, hold or sell?
Add. I think that agrochemical companies should do well, and UPL is also planning to raise some capital. So add. I think that 800 is coming in the stock.
Okay, Nachi wants to know about NIIT Limited, purchase 50 shares at 390 rupees per share. Should he average for the long term, Kunal?
Well, I would suggest to average at current levels of 285.
What's your view coming in on NCC, Vijay? Should Siddharth from Bangalore look at buying this one?
Well, as I said, that if you want to ask me, I think the best placed company is L&T, but NCC also looks good for a target of 80, 82.
All right, and with that, we come to the end of the rapid fire as well as query segment. Thank you so much, Kunal, Vijay, for joining us on the show, sharing your picks for Diwali as well, which our viewers will be seeing in a short while from now, as well as resolving viewer queries. And all of our viewers, yes, we've come to the end of the query segment for this Samvat, but when we come back next week, we'll be in a brand new Samvat and we will continue to take your queries. But for now, we'll slip into a break on this edition of Buy Now, Sell Now. Don't go anywhere. We have management coming up on the other side.
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you will be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You could remember that every bull market is higher than the